Hello, you're watching Proactive London. I'm joined by Simon Deacon, the CEO of Light Science Technologies. Simon, good to speak with you. You're out with your half-year results. Can you give us a summary because they look very encouraging?
Yeah, hello, Stephen. Yeah, the half-year results are strong. You know, this week we have shared a strong set of half-year results, which further demonstrate the continuing progress within all the three key divisions, which is controlled environment of agriculture, contract electronics manufacturing, and the passive fire protection. So yeah, we're really pleased with the half-yearly results. Revenues were up 19.3%, committed group forward orders at 5.2 million, gross profit, which is really key, and our strategy to focus on this is up to 26.6% from 20.9%. So a really good, strong increase there. Our quoted pipeline continues for the group at 51 million. And that's quoted work. And more recently, we signed our first distribution agreement in South Africa to grow the controlled environment of agriculture and to be able to sell our products globally. And that's part of our strategy to do that in Australia, Middle East, Americas, and South Africa. So very pleased to get that first one signed up and moving forward. We're also, our cash has increased. We've got 1.5 million pounds of availability of cash, and we've also enhanced the group debt facility with a further 850,000 pounds across the group, which helps us develop product as we move forward, which is key with the SensorGrow product that we're doing. And we also had two new board members, Dr. Graham Cooley, who's our non-executive chairman, and Richard Mills, who is a non-executive director. So really important roles who have come on with great experience of being on the market. So really pleased with the last 6 months.
I mean, going back to those key metrics, Simon, what underpinned the positive trends, and can we expect more in the second half?
Yeah, absolutely. We've seen an increase in inquiries in the controlled environment of agriculture, which we're really pleased with. And the acquisition that we did with Tomtec in that field has brought revenue into a group with over a 30-year business, and their experience in providing control systems, irrigation, lighting, sensors into glass houses, vertical farms, and polytunnels has really helped strengthen the group in the controlled environment of agriculture. So really pleased with that progress. But also we've seen an increase in the contract electronics side of the business. That's still going very strong, opening up new markets, which has been important in the sports entertainment side of the business. As we see, you know, more reshoring going on in manufacture in Europe and the UK, and our clients decided to do more manufacturing here. So we see that continuing going forward. So I think this year will be our strongest year yet as we move forward. So really pleased with the acquisitions and the organic growth. And with the passive fire protection, we're now seeing orders coming through, being completed, new sites and new orders have taken place from June. And so huge market opportunity for us there with over 50 billion market opportunity in the UK in the passive fire protection. And we're seeing strong growth there too. So what we're seeing with the group is more of a leveling up with the group in revenue. So it's not just CEM, it's CEA and the passive fire protection starting to level up and also bring in more profit margin to the business, which creates that cash generative position.
Does the recent investments in the passive fire protection division reflect expectations that you're only at the start of the growth curve?
Absolutely, it does. There's been identified 11,000 buildings which are high risk, which are over 11 meters in height, and those need tackling first. You know, with the average price of an order between 300,000 and 400,000 pounds, you can imagine there's an awful lot of work out there. And with our product, with the injector clad product that we install, is really significant and lowering in costs, because you don't need to take the facade down of a building, and it's easy to put in. You have to take the tenants out, and it's much easier to install and quicker. So it's less disturbance and a lot more improvement to remedy the building quickly and a lot cost effective for the customer. So we see that moving forward, but also we see there's over 33,000 buildings which are under 11 meters, which also will need dealing with at some point in time. So as you can imagine, that's a large market for us to go at. And the government has created a 5 billion fund to support that. And we're seeing that coming through as well. So we're really pleased with the passive fire protection division. And we expect to put our technology in there with our sensors. We've been doing fire sensors for over 15 years in the contract electronics manufacturing side. And to be able to put sensors into cavities, so you're actually detecting fire within the cavity before it gets into the core of the building, is really important. And that will create recurring revenue stream for us.
Simon, can you elaborate on the relationship with Dyson and talk about the CEA trial?
Yes, the Dyson trial is going well. It's in open agriculture, so not enclosed. The sensors, SensorGrow product that we've been developing is to do numerous things within an enclosed environment. So an enclosed environment, we're looking at CO2, we're looking at temperatures, moistures in the air, nutrients in the ground. But in open agriculture, the trial is about greenhouse gases. Nitrous oxide, N2O, is really important that you can detect, and how we're putting the fertilizers across our open ground, because an awful lot of fertilizer gets wasted. It's extremely expensive today. And then it goes into our water courses and causes pollution. So it's really important to detect how that's going through, and the N2O, how that's being put, and detecting that, so that we can stop the wastage of fertilizers and also protect the environment, which the government policies are really pushing through. With our sensor development, we're really seeing a broader picture for the SensorGrow product, because methane is also very critical. So if you look at nitrous oxide, N2O, it's 273 times worse than CO2. And not many people realize that. So it's really important to be able to detect it. We're also moving on to developing methane, CH4, which is 27 to 30 times worse than CO2, and also ammonia, NH3, which is an excess use and runoff causes for water pollution, which I was talking earlier. You know, these items, you know, ammonia costs an awful lot of energy to produce, around 4% of the world's energy. So if we could start detecting how it's being used and feed that back, then actions can be taken. So big data is really important part of our process. So yeah, really getting some really interesting results from that trial with Dyson.
What opportunities are there in the CEM division, Simon?
CEM, Contract Electronics Manufacturing Division. We've seen more recent times, as I mentioned at the beginning, you know, reassuring back to manufacturing in Europe and the UK. Our clients, you know, large clients around the globe, and we make their finished products for some of these clients. And if that be in audio, pest control, robotics, fire and gas and safety items. And what we're seeing is more of them wanting to manufacture back in the UK, and the reasons is shipping lanes and costs of carriage and the uncertainties in the world. But also we've seen opening up in new markets. So sports entertainment market, over the last 6 months, we've received 2 orders worth over £260,000, and they're for electronics within golf balls and monitoring how many times you might hit the ball. So electronics is in everything, huge amounts of growth and opportunity, and really pleased with how that division is developing and continues to grow and is cash generative.
Simon, what should investors expect from Light Science Technologies going forward? Why is now a good time to look at the stock?
We are a growing company. We've demonstrated that year on year. We're increasing our profit margins year on year now. We've brought 2 acquisitions into the group, one in the controlled environment of agriculture, which strengthens that division. But also in the passive fire protection, adds an extra layer and a market to us to put our technology in within the sensors, but also is very profitable because the margins are strong. So it's a really good time to invest in Light Science Technology Holdings. We see an awful lot of growth in our SensorGrow product, not only in enclosed and open agriculture, but that moving into cities and towns to detect pollution, as environment is very much on the world's agenda, and how much CO2 that we produce and greenhouse gases. So those products are going strong and that development continues. We're also, you know, our focus was to become cash generative moving into 2025. We're progressing strongly with that, so I'm really pleased with that progress, and the higher margins. So overall, we're really going in a good way, and these are a good set of half-year strong results for the market. So I hope people get behind us and see the great opportunity for us. You know, our focus is to be 100 to 200 million pound revenue business, and we're moving forward with that.
Simon, I hope you'll keep us updated with any progress. Thank you very much for speaking with us today.
Thank you very much.
That's Simon Deacon, the CEO of Light Science Technologies.